Hi everyone and welcome to a new video. In this video we'll take a look at what degen farming is and what you can do to make the most out of it. If you like the sound of that, be sure to hit that like button and don't forget to subscribe at the end of the video. I assume most of you know what yield farming is, but for those who don't, quick recap. Yield farming is the practice of staking or lending crypto assets in order to generate high returns or rewards in the form of additional cryptocurrency. So basically, in a nutshell, you are risking and putting up tokens so that other people can exchange from one token to the other, and to make things really interesting, the project will give you extra rewards, so it's worth the risk. Needless to say, we are talking about a risk-reward balance, so if you got really high rewards, then you can assume that there is a really high risk. As a quick example, you could take a look at Uniswap or quickswap, for example. Click on farms and then take a look at liquidity pool mining. Scrolling down, we see that if you provide liquidity for Ethereum and USDC, you'll be getting 31% annually in returns. These high returns are created, of course, by the fees. So each time somebody swaps, they're using your Ethereum and your USDC, and they're paying a transaction fee. A portion of this transaction fee is going back to everybody who provides liquidity. Now, usually this percentage is still pretty low and isn't interesting enough, and that is why QuickSwap is giving you additional rewards in the form of a Quick token. Now, thankfully, QuickSwap is a decent project, and there is really some value behind this token. It is not a degen farm. Moving on to page number 3, we see the returns going up significantly. We have 1000%, 1200%, and so forth. And you're probably wondering what the hell is ERO1 token or Mcash and so forth. And of course, this is the reason why these returns are so high. These tokens are very new, very small, and very volatile, and that is why they're giving you extra rewards in order to provide liquidity. However, if you believe in these projects and you really want to support them, then you can decide to provide liquidity and enjoy these high returns. Alright, now that we know what a yield farm is, it is time that you know what a degen farm is. Basically, degen farm is the same as a regular yield farm, but the only difference is that the farm token holds no value at all, and usually the team behind the project has no intention in creating real value for the token anyway. In other words, you're playing a game of hot potato and you're trying to sell that farm token as fast as possible and hopefully still at a good value. This also means that usually the price of the token drops really fast, and that of course the returns on each of the farming pairs is going to drop very fast as well. I think the average lifetime of these farms is less than 1 month. So hopefully you now understand why they are called degen farms. Just as an example, this one still has to start. As we can see, if you farm the native farm token called Gyoza, you'll be getting 89,000%, 93,000%, and so forth. But you can also imagine, as soon as the farming starts, these APRs will drop significantly, and of course the price of Gyoza will drop significantly as well. So how do these farms work? Well, first of all, you'll notice that all of them look very similar when it comes to layout. The reason for this is very simple. They all use the same basic code and they copy the code from each other. This means that all these projects are very low effort and the developers are investing as little time as possible. Next, they provide some starting capital for their farm token. So in this case, we have Unity. So they have Unity USDC and Unity Matic. They've provided 10K in this pool and 14K in this pool. And of course, since they're creating all the tokens themselves, they can put up any price they want. Basically, if I would put $1,000 in a liquidity pool to start with, and I'm creating, let's say, 10 tokens, that means that each token is worth $100. I can also decide to put in $1,000 and create 1,000 tokens, and then of course this price here at the bottom would be $1. I guess you get the idea. They're creating it, they can make up the price and they can do whatever they want. And this is probably why it might get confusing. They're putting up money, they're doing at least some development and some promotion for their project. How the hell are they making money and why are they doing this? Well, the first thing you'll notice when you click on these farms is that you have 0 fees on their token, otherwise nobody would ever decide to buy them, and of course very high returns. And this is because the risk is insanely high with these tokens, because each of these tokens has 0 value. When you start looking at different farms, and we see these ones, over here you'll be investing, for example, the Binance token and Binance USD. These are of course tokens that people are willing to hold. But the big difference between this one and this one is, here you're paying no fees and here you're paying 4% fees. Now what happens with this 4% depends on each project. In the ideal world, they're going to use this money to improve the project, to do promotion, reinvest in the project, put it in liquidity pool, and so forth. Of course, we are talking about degen farms for a reason, and this is rarely the case. Just as the people jumping into these Degen farms, they just want to make money, nothing else. This means worst case scenario, this 4% is going completely to the developers and they're just putting it in their own pocket and then let the project die a week after it launches. Best case scenario, they're using a good portion of this 4% to provide liquidity for their own native token and maybe even use some of the money to promote the project. But again, this is really best case scenario. If this reminds you of a pyramid scheme, then I think you are on the right track. Basically, as long as the total value locked is growing, this means that the project is growing and you're pretty safe with your funds. As soon as the total value starts dropping, that means that people are leaving the platform and that no new money is coming in, and that means that it's time to start running. Right now that we know what a Degen farm is, it is time to talk about 5 important rules. So the first one, you could have guessed, never buy the farm token. It is going to zero faster than you can blink with your eyes. Second, get in early, get in from the start, start farming and start getting those rewards quickly, sell them quickly. The first few hours of a farm are so important. You can easily make back the 4% fee that you have to pay on your non-native tokens. I think you can earn back 2% in the first few hours, so already halfway there. So this is very important that you get in early and of course get out early as well. And number 3, always track your TVL. This means as long as new people are getting into the project, that means the total value locked is growing, and as long as the total value locked is growing, the farm will be interesting. As soon as it starts dropping, the price of the token will start dropping, the rewards will start dropping and so forth, and it is time to run. Number 4, the fees will kill you. Don't forget, you're paying 4%. This means if you're getting into a farm late and you're getting, for example, 200% APR, which is still very nice, the 200% will continue to drop sadly, and you'll need several days to earn back and break even. If you then keep in mind that the rewards will continue to drop and most farms will go to zero within 1 month, you can imagine that it'll take more than 4 days. Last but not least, we have number 5, which is limit your exposure and always assume that you'll get rug pulled. Now there are 2 kinds of rug pulls. The first one is a hard rug. This means that they put something in the code to steal all your funds. This is of course the worst one that you can have. Thankfully, there are ways to limit your risk this way. And then second of all, we have a soft rug. This means that they start with a project, they either pull out all the liquidity or they simply abandon the project and lose all interest, and then the token dumps even faster, maybe within a week, maybe 2 weeks. So your money will be stuck, or you'll have to accept that you lost your 4% fee and then take that loss and move on to the next farm. So how can we limit our exposure? Well, first of all, don't put everything in the same farm. Use different farms and spread out your risk that way. Second of all, use different wallets. If you connect a wallet and they put some nasty code in there, they can only clean out that one wallet and they cannot clean out your other wallets. So this way you will limit your exposure to that single wallet. Now, as an example, I'll use this project. It's an interesting project that I've been following for quite some time. Don't forget, it's still a Degen farm, and I have to be honest, the Twitter is really questionable. As we can see, they have 17k followers on their Twitter, but the interaction is pretty low. Over here, 2 responses, 2 likes, 2 likes, 1 like, 2 like, and so forth. So this is really low engagement. So I think a bunch of the followers have been bought. So yeah, don't add too much value to this. And yes, this is a bit of a question mark. Nonetheless, I entered the Sandman farm pretty successfully. It was definitely an interesting project. They're using different layers, so this is something that different farms are doing as well, especially the ones that have a little bit more long-term vision. So for example, for 2 weeks you'll be able to farm. After those 2 weeks they stop creating the farm token and they move on to a new layer. So this layer is basically a copy of the previous one, but they start with a new farm token. So the first one was the Sandman layer and the second one was the Delirium layer. So the Sandman token has actually a pretty nice graph when it comes to a Degen token. So of course in the beginning, the first day it dumps really fast. This is because the rewards are so high in those first few hours. People are getting those rewards, selling them immediately for Matic, Ethereum or something else, and that is why the token drops really fast. Now the interesting part that happened here in the first iteration of this farm, the price actually started going up, and it was, for a farm token at least, pretty stable between a price of 2.7 and $5. And then of course on the last day of the farming, the price dumped because the project itself tells you to sell the token and start preparing for the new layer. So what you see here is the most optimistic scenario that you can ever ever think about when it comes to Degen farming. Usually it doesn't look like this. This immediately also shows you if you ever decide to buy the farm token before the farm launches, keep in mind this will happen. So if you ever decide to do it, be sure to be behind the PC and ready to sell in the first half hour and take your profits. After the successful Sandman farm, they launched the Delirium farm. This is what we can see here. And we see that this farm token has a lot less value than the previous one. Let's take a look at the chart as well. And over here we see a more classical example of a farm token. So it starts high again on the first day, it drops really fast, then it still stabilizes, which again is a nice performance of the Sandman Finance team. And then we have this drop off, and then of course it never recovers. And then right now we have the third iteration, which is the despair layer. And sadly, this story hasn't ended well. It started out with some really high TVL, probably because of the success of the previous farm. People were expecting the same results. And of course, this didn't happen. So looking at the price chart, we see that people were really hyped about this token and about this third iteration. People really started buying the token before launch, before the farming started. Of course, on the first few hours, it dropped significantly, and then on the end of the 24 hours, the price wanted to stabilize, but it just crashed. People were probably expecting the same result as we had in layer 1 and layer 2, and I have to be honest, I was expecting the same. I thought we had at least 3 days of price stabilization before it would crash completely. Sadly, it crashed completely on the first day, and it never recovered. Now, the question, of course, is if people were so excited about this project, how the hell did this happen? Now, to get a better understanding of what happened, I suggest that we take a look at the numbers that I collected. So in the first farm, in the first few days, they started out with about $700,000 in liquidity, and they went all the way up to 1.7 million. Then, of course, on the last day, the farm ended and you couldn't get any rewards anymore. Then, of course, the price dropped significantly and the total value locked dropped as well, because yeah, there was no reason in keeping your liquidity in those pools. Taking a look at the new Sandman farm, which was the Delirium layer, this is very interesting. So this farm started actually at the same liquidity as the other one ended. So remember that we were at about 1.7 million, and we actually started the Delirium layer with 1.7 million. So basically everybody was happy from the first layer, and they invested in the second layer as well. So the total value locked in 24 hours shot up really quickly all the way up to 2.8 million. So 1 million in just 24 hours, and it just kept on growing all the way up to 5.4 million. So this is definitely impressive. And then of course it started going down because the rewards went down, and then at the end of the farm, of course, the total value dropped significantly as well. And then we have the third layer. I just added the information here down below. So this is the most recent one. This is still running. And we see that even when the project didn't launch yet, people were putting money and liquidity into this project because they were still so excited about the previous layer. This caused us to launch on the first day with 3.4 million in liquidity, and I think this is where the problem lies. The only way this layer could have been successful is if the creators were able to create even more buzz and get more people into it. You can imagine it's really hard to get the same amount of growth when you start with 3.4 million. And this is of course what happened. People didn't see the total value locked going up, and they panicked and they ran away, and this caused a total collapse of the whole project. And then of course, if you then take a look at the money that was being locked up, almost everybody, very understandably, was locking up their money in non-native tokens. So nobody was buying the Despair token. So I hope this shows you how important it is to look at the total value locked. So it is important that there is enough value locked at the start of the project, but apparently it's also important that there is not too much locked, because otherwise there is no room to grow and you won't have enough new people coming in to pay for the rewards that you want to cash out on. And just to give you an idea of how devastating this result can be, we see that there is still 1.5 million locked in the Despair farm. Sadly, when you look at the farms themselves, we see that the native tokens, they quote-unquote only have 1000% and 1500%. Even this one with the old Delirium token, you're only getting 282%. And when we take a look at the non-native tokens, so the ones that all of us trust, and those are the less risky, it's already down to 15%, 10%, and 8%. So you can imagine if you have to make back 4% with these rates, it is going to take a while. Now, before you guys do anything, I suggest that you put this website in your favorites. It is called rugdoc.io. People in this community are actually doing the effort to look at the code and make sure that there is no hard rugs built into the code. So this means that you are a little bit protected if you're looking at these websites. Of course, they can only do so much and they're doing it for free, so it's not 100% waterproof, but unless you're able to read the code yourself, this is the best place to start. So the first thing I do is I filter on network, so in this case we'll take a look at Polygon. Next, I never select anything above some risk. So let's just say some risk, low risk, and least risk. And then if you want to be even more safe, you click KYC and audit it. Next, you can click on the project that you're interested in, and then you'll see all the details. So we have a max deposit fee of 4%. This is really standard. We have a 5-hour time lock, and all transfer and tax tokens are supported. Of course, they always say triple check the contract, which is something you'll always have to do. And then you can click more information to get even more details on this project. As you can see, this resource is really, really great. Now, it's very important to know that this team can only do so much. So they can look at the code, they can see if it's audited and so forth, and then they can put a risk label on it. As I said, it is never waterproof and they cannot vouch for the teams behind it, so they cannot protect you from a soft rug. For example, this project, Polydragon, it had a Paladin audit, it was labeled as some risk, but sadly, as we can see here on October the 9th, the team dumped their tokens, closed their socials off, and ran off. This is of course a soft rug, they cannot do anything about it, and this is also another reason why you should never buy the farm tokens. This is something they can dump very easily and it will lose all value. This again shows you how high risk these farm tokens are. Another tool that is a must for every Degen farmer is VFat.tools. Again, I'll put a link in the description of this video. It is a very basic website, but they track tons and tons of different farms. So what they do is they connect to all the different farms and to all the contracts which are on a blockchain. This also means that if the website of the farm is going down, or even worse, if they're trying to scam everyone and they just close down the website, or they make sure that the functions to withdraw, etc. don't work, you can still use this website because of course all the contracts, they're on the blockchain. So if you have the right code, if you have the right website to interact with these smart contracts, you'll still be able to perform all the functions, and this is exactly what this website is doing. So they list all the farms they can get their hands on. As you can see, there are tons and tons and tons of farms over here, and you just click on the link and then you'll be able to withdraw your money, add new funds and so forth without going to the website directly. So a quick summary: never buy the farm token. Second, get in early, make back your money, break even, then make some profits, and then get out and move on to the next farm. Always keep an eye on the total value locked before you start farming and while you are farming. Never forget 4% fees, they can kill you. This is the reason why you have to get in early. And 5, limit your risk and your exposure. Always use RugDoc, see that the code is audited, make sure that you use a burner wallet, if I can call it that way, and don't put all your eggs in one basket. Alright, that's it for this video. If you enjoyed it, don't forget to post a comment because that will help push this video in the YouTube algorithm. Don't forget to smash that like button and don't forget to subscribe. Thanks again for watching and I'll see you guys in the next one. Bye.